This is an Ask Slim special presentation. Go to AskSlim.com for charts and analysis, educational trading videos, trader coaching, and hedge fund consulting.
FutureSpeak, March 9th, 2016. All right, well, we have commodity markets that are actually, I would call them on the firm side compared to what we saw for so many months. We have a lot of things that have had some pretty strong moves, and we have equally some number of them that had moves earlier and are stalling right now, but overall you've got to say better markets here for commodities. We're going to look, as we always do, at energy, foreign exchange, the metals, the treasuries, the stock indexes, and the grains and coffee. So 25 different futures, and we're going to look at that over the next about 40 minutes. So nice long segment, and here we go. Take a look here at light crude as we look in energy. I'm going to show you a little bit different chart in a moment than we look at, just to give you a little look at how somebody who is a shorter term trader might actually get a sense for swing trading. I'm going to show you a setup that I use. So take a look here first on the weekly chart, and you can see in here all the patterns coming right in here where they made their lows. We were looking for a rally in this period and really came nicely. So take a closer look in here, and what I want you to see is a few things. First of all, you know, we had a move up this week, and it comes up and tags that 38.5 number. That was the number that we were looking at as the first resistance here. You can see also these highs coming right across over there that are a similar area. So this is an important number. Now, it doesn't mean it's going to stop it there. It just simply means that, you know, we have to look and see, will it pull back from here? Shorter term pattern says it won't, and I'll show you that in just a second. So before we go there, I've moved in some of the intermediate resistances now, because the patterns are suggestive of the fact that we could get through that 38.50 number. So right over here, we'll call it about 41.30 is the beginning of that big major resistance zone. And this was actually my target from the beginning of the year. Right around that 45 number, thinking that that's we'd get about around to the top of that resistance number sometime later in this year. So just wanted to put that on there. I still think it is going there at some point this year. So let's take a look at the short-term picture here on the daily chart. A few things to consider. First of all, here's that intermediate resistance coming in right there around the 38.50 number. There are the next two resistances there, 41.30 and then up around 45.5. Here's the 89-day moving average coming down there, and that is significant also. So let's take a look at these shorter cyclical patterns, which are always, you know, my key. What we had looked for was a pullback and into the minor support area and then a rally. Well, you can see we had a one-day pullback. That was on day 8. That's a phenomenally strong pattern when you get that. So there's always a possibility that you'll have 1 or 2 days back into that support and then turn up. It's not the pattern I'm looking for in here, really. I'm looking for it to actually get up and test this 38.50 to 39 number, which is right in this resistance area there, and then probably chop around some more. So this is a positive pattern in here, and you can see that we call this a right-hand translation, where all of this rally essentially came in here, and you couldn't even have a downtick. So that's a pretty strong pattern when you see that, and it just says likely to keep following this pattern on the upside in here, well, until it gets tired and then starts to roll over in this cycle action right here. So right now, everything in here in light crude still looking exceptionally strong. So I'm going to move in a chart now that I haven't really shared here before, just so that you could get a sense for a set of tools that people could use for anything really. And I think this is a really, I'll call it my dominant chart for direction and size determination. So I did a swing trade segment in if we go into tools for text, with a chart grid. This is essentially the longest of the 3 charts on there, a 2-hour chart that has a set of tools in there, and I also have in the S-Slim market condition indicator in there also. So it really is, I set it up this way because it just screams at you as far as the direction and size when you look at this chart. So take a look here at a light crude 2-hour chart that is 20 days long. And you can see in here, well, talk about screaming at you. So what this chart is it takes the slim ribbon and that data and then colors the chart in a way so that you can't miss what the momentum is in here. I really wanted to have it look that way. So this whole green area, when it's like that, to me it says that, well, you never ever want to be in a short position of any significance. You would only take the tiniest little short swings in there. And if you were taking big trades, it would only be on the long side. Here you could see the slim S-Slim market condition indicator as it moved through the swing zone and then turned green right here. So it shows you really powerful, strong upside condition right in there. And we're seeing that now, and I just showed you that on the daily chart also. So you can see that. Now if I move this out, I'm going to move this out to, let's say 90 days for a 2-hour. And you'll see that the stair-step downward move really showed up quickly and strongly every time it turned down. You had long periods of decline right in here. So I'm sorry, I'm still sick. And when it starts to turn up, it gives you that real great clarity also. So I wanted to share that with you, and you could see this is a great tool. And I think that if you want to have that kind of a setup and you get slim charts, well, I'm willing to share that with you. And I'm working on a way to actually post some of those. So I hope that you saw that as interesting when we looked at that. Next thing we're going to look at in here is, as we stay in the energy category, is gasoline. And gasoline has been an amazing trade. We absolutely nailed that one at the low, and we'll take a look at that right here. I hope I don't just keep coughing this whole time. Here is a look at that chart in gasoline. So you could see the big patterns in here, and that very much nailed that expected bottom right over here. And you could see these bottoms as they occurred right in here also, and really nice cyclicality. So we'll take a look right over here, and you see that it's moved up into a resistance zone, got above that 34-week moving average, which is really a good thing. Excuse me while I take a drink of water. And this chart in here gets up to this resistance zone, and I wouldn't be surprised to see it stalling there at all. Take a look at this pattern in here, and this was really a key analysis by us, where we saw this inverted head and shoulders forming, and when it broke out the steepest line, or that neckline, you see it exploded up. Now it's up to that 89-day moving average. Here's the measurement for the inverted head and shoulders right there, up to about, well, we'll call it 152 or something like that. Here is getting right up to that 89-day, and you could see what it's done at the 89-day. All of these failures in here. So I know I have a number of people out there still in this long side trade. This looks to me like a plus spot to lighten up in here. And if you want to hold a little bit maybe to that measurement or to these other highs, fine. Everything about this pattern overall is still okay. But when you get up into that intermediate resistance like we have on the weekly, it is suggestive of the fact that you've got to start to take some profits in on what was this massive trade in here. So just a great one, and that's one that came in perfectly, and I'd call it a home run right there. So next one we're going to look at is heating oil, and we'll take a look at this /NG I'm sorry, /HO. The next one's going to be NG. This is, I've been mentioning the fact that I was suspicious about an early bottom going on in here. And now you could see that it's clearly, a lot about cycle analysis is recognizing shape. And the shape of this just does not really allow for this in here to be taking it down any longer. So that says that we have a new upward channel that's formed in here, a pattern that is essentially shortened. And what we're going to look for is whether or not we're dealing with a shorter cycle in there, but it's very clear that we're in a rising period here. So these two blue lines said that's where we expected the bottom to come, and the bottom you could see came much earlier. So powerful looking chart in here still. And if you look at the daily chart, we were suspicious because last week we said there was a bullish pennant, and that really said there was probably going to mean a low coming in there. And there you could see the bullish pennant and the breakout now popping up here up to the 89-day moving average. And again, we're focused on that 89-day moving average because you could see all of these attempts to get there. It failed. Now it's actually gotten to it right now. Question is, you could see these smaller cycle patterns in here. So a little rally in here. You see that's where it started and comes down, a rally and comes down, a rally and comes down, and then the rally through. So we'd expect it to pull down in here, right? But then it's going to hit some support, and that's going to be a buy area here for the next pop up through there. So that looks to us like maybe it's stalling in here at the most, but then overall, a good pattern, and heating oil looks like it's made an important bottom, doesn't it? Now we will look at /NG, which is natural gas. Big patterns in here are just super ugly. When you look here at this pattern in here, it looks like, if I highlight this, it looks like October before the end of that low. So we could be in a lot of choppy zigzag without making a low until the fall, really. So overall, a bad long-term pattern as we look at it. Everything is bad long-term in there. When we look at the shorter term, we'll look at these last two cycles. So we expected that there was a bottoming in here in a couple days. I'm not sure whether we have it or not, or it's going to have one more little dip in here on these cycles. But basically, it looks like we've made a short-term bottom here in natural gas. It might get tested in here in the next week and then move on the upside again. Now, I want to go back to that shorter-term chart, the 2-hour chart that I look at for swing trade setups. And I want you to see something that's happening in this chart as I get it in here set up that I think is reasonable to say, there might be a strong message in here. So here is that chart in here. And again, this is a 2-hour chart. Now, you'll see a lot of difference. Remember, in light crude, we showed you that the SLM market condition indicator had moved through the swing zone and up towards this, 85 number or something like that. Look at it down here. You see that red number down there at -91? It shows you the internals are just horrible on this. So now if I take a closer look right in here, you'll notice that it turned green over here. So that is giving me some indication that that short-term cycle we're looking at as potentially bottoming is happening. Now there's some other things in here that I look at, and that is that the disparity index is maybe gotten a little bit to overbought there, and the TRIX is way up over here. That's a triple exponential moving average. So we might get a little play on the downside in there, but to me that's setting up for a potential long side trade in natural gas. Now, being that it's so much against the grain in the longer patterns, it's probably wouldn't be a big trade for me. But still, I wanted you to see the changing picture when we look at it on the daily chart and then on that 2-hour chart, how it gives you a lot of information on there. And you could see the changing color on that slim ribbon as a reason to believe that there's a bottoming going on in there. So I think that's great stuff, and I wanted to share that with you because I look at a lot more things often than I put up on a regular basis in this particular segment. and then try to scatter them into our other 7 categories of segments, other 6 categories of segments. So that's a look at energy. Hope you found good stuff in there. There's that natural gas daily chart that looks like it's about to turn up for a trade. And I came back here because I wanted you to see that. If we got a little pullback that and a buy in here, that the target is right up over here. We'll call it around 193 to 198, the top of that short term minor resistance area right over there. So that would be the trade that we're potentially looking for in here in natural gas. So that's it. Take a look now as we look in the foreign exchange. Take a look at the dollar. Now we're in a period here of kind of waiting for ECB meeting, and the dollar actually got some legs today and then reversed. We have a couple setups, 3 of them actually, 4 of them I think live now in currencies in our rankings and setups. And the dollar actually looked like it was bottoming. It's at a point to do that, and I actually think it is. It might be a day or so away from the bottom. We can't. We don't really try to perfectly time our rankings and setups. We're a lot more about the variance of cycles, and that it's within a few days of when we think something might happen, and it's in a location that we think something might happen. So that's how we use it, and we respect the principle of variance in cycles, and we try to really look for how to get the best window of time and the best zone of area to get an entry. So take a look here at the dollar. Now the dollar is in a rising intermediate term area, and that would give you a reason to believe that when you get into points of a dip, that you're going to want to be buying it for the next move on the upside. We have a situation where there is a lot of fear about the euro, the whole eurozone, the British leaving, that's the Brexit, now talk of Italy leaving, talk of Germany having to leave. So there is a lot of turmoil out there, and I think you're getting a little bit of a bid or upside reversal here in the euro ahead of this period here of the ECB. But there's a lot of risk here, and a lot of potential for a pop on the upside here in the dollar. So you could see that in this green zone, only a 3-week rally so far, and you certainly could get a lot of chop around in here, but I would expect, based on this pattern, that it would test the high of last year, that 2015 high, before this is over with. Of course, if it ever breaks this low right over here, or even approaches it, then that would be the end of this whole scenario. And I don't really see that right now, especially when we have so many negative interest rates out there and our central bank talking about raising rates. So that's a look at the dollar on the weekly. Now, when we look at it on the daily, this is really what has us believing there's a rally coming in the dollar imminently. And you could see we showed you on the weekly that we're in that new rising period, right? So that's this right in here. So if I draw that in, you could see that's that upward channel we were looking at. So if this is the ideal cycle looking like this, and you apply upward pressure in it, you get a cycle that looks like this. So I'm giving you a cycle lesson in here, right? So that's what it looks like, and that's how you get the upward stair step. When you get into the support zone, and you can see it's nailed the 50% right there, then that is the entry, is when you get to in the support at the bottom of what should be the declining phase in there. So to me, that's a perfect long side entry right over there. And again, the ECB can mess it up, or it can change it by a couple days, or we'd be a couple days early. So you can see the dollar in there and why we're optimistic in there. So now when I switch this over from the dollar to the euro currency, we should see opposite things in there, right? Because the dollar looks like it's going to go up. So when I blow up this pattern in here, and we look for the inverse correlation. So if the dollar's in a period where it should be rallying, the euro should be in a period where it should be falling. And you could see that really is aligning pretty well right there. We would expect that this intermediate area right here around under 107 will be tested in the next 6 weeks or so. and it could be a lot worse than that. So we have to see how that sets up, and that's why we believe the dollar has 6 weeks or so of potential upside in there. And by the way, that correlates to a corrective period in gold. So these things do correlate, and they are lining up right now. So we're going to keep believing that until the charts or the markets tell us otherwise. So if we're looking for a rally to start in the dollar, we look for the inverse in this right over here, and you could see that this pattern is suggestive of a decline. So this was just a non-existent rally period right over here. That was where we expected this to turn up. This intermediate period here actually got you the rally, right? But now they're all turning over as the dollar is turning up, and we're looking for a decline in here in the euro currency. So when I switch this over to the British pound, there is some alignment in there also. Nobody knows what's going to happen on this, on the Brexit, and there's just a lot of discussion both directions in there. It's probably 50-50 right now. Here's the big red zone on the British pound that comes because it broke that last low. This looks like about 6 weeks also on the downside in here at a best case. So we're going to look for more downside in there also. And when we look here at the shorter term pattern, you'll see that right there that that looks like it's about to roll over and move to the downside also. So all of these things are really strongly in alignment, and they all correlate. Japanese yen, we have been positive in there, and we have some number of days ago we put in a long side setup in rankings and setups, and that actually has been working nicely. And again, we get that out of the cyclical patterns. So you can see in here, the cycles perfectly created this inverted head and shoulders. That's I'll keep saying this all the time because we have so many new viewers all the time, new subscribers, that patterns get formed by cycles. So you see the cycle in here formed the left shoulder. That's the cycle right there. This cycle formed the head and the bottom of the right shoulder, and then this cycle in here formed the right shoulder and the breakout. You had the little dip in here on the small cycle and the extension on the upside in here. Now what you have going on, this is interesting. So the question is, first of all, you see the triangle forming right in here. So that says that it's likely there's one more pop on the upside in here. 2-to-1 odds will make it before this is over with, and it doesn't have to make this measurement in this particular cycle. It could make it in the next one. So you get after this move in here, after this triangle and the breakout, then you get into this corrective period that you could see here, and then likely another pop right over here on the upside as the Bank of Japan realizes that the absurdity of what they're doing to that economy has to change, and that chances are that the Japanese yen does even better later on in the year. So let's take a look at the daily pattern in here, and you could see this triangular formation that we talked about is right here. It looks a little different on the daily pattern, not that much different. So it's right in there. So you could see the small cycles in here and how they are participating in that corrective pattern. And now in this rising zone, this is where we put our long side setup in there, and now likely to try to pop up through there. So we're still in there. If it breaks underneath this low or even really approaches it, that's not a good sign. That would have us exiting what we think a favorable setup area. So we're still looking for a pop out of this bullish triangle that's forming in here, or pennant, depending on what you call it. So not a bad pattern, right, when you look at that. And that's how we found that particular long side setup. So now when we switch over to the Aussie, you see in here the phenomenal bottom that was made in here on the cycle patterns. It blows through that minor resistance that we had in there, and gets past this high right there on the cycle. That means that a base is in place on the longer term pattern. So all this downward force that had pushed down through that whole time, this level right over here could not be surpassed unless this was over with. and then there was a new force pushing on the upside. So if we put channels in here essentially, or envelope the downside move, which is like right like this that you can see, that says that the new envelope looks like this. You can see that, and that what it means is that this pattern in here likely comes up a little bit more, rolls over like this, and then spikes up again over there sometime later out in the year. So we'll call a base formed in here, and this speaks to a lot of the fact that the natural resources are doing so much better, and this of course is a natural resource based economy. So you could see in here this massive upside move. Now what I want you to note is that after it got up here and we put in this short-term support area, comes down and tests the 89-day moving average and absolutely explodes on the upside in there. So that was a really powerful move. Last thing that we're going to look at is the Canadian dollar, and we'll switch over from the Aussie from /6A to 6C, and you're going to see in here that this bottom in here was just absolutely dynamite. Notice it's gotten up and approached the 78.6%. That is a powerful thing for it to do, and it says, similarly to what we see in the Aussie, that it looks like it's beginning to form its base. Now, in the other one I said base made, right? In the Canadian dollar, well, you see this is the high that didn't get taken out. So to me, this is a base forming over some period of months, and at a point now where it is likely to start to get a little resistance and roll over. One more sip of water. Okay, and now we're going to get out of the currencies and switch over into the metals. That chart just popped out at me. I just talked about that Canadian dollar and that powerful pattern. I'm gonna, before I get into the metals, take a look at this pattern, and you can see, remember where that cycle bottomed in the on the Canadian dollar? Take a look here at this 2-hour chart, and you could see the exact spot the cycle bottomed, and you could see how it went from red and neutral to solid greens, moving up in neutral, and that really speaks to the value of that chart. So I saw that sitting there, and I said, well, I got to show that. So now let's switch over to the dollar, and from the dollar, and look at gold, which is affected by the dollar. The gold got up to and through our target for the year already, and of course that had us raising our expectations, and therefore later in the year, because only a powerful situation could have that happen. So take a look here at /GC. Now let me get this set up properly, and here you go. Okay, so there's that chart. Now, we have had a long rally in gold. These cycle periods in here, for those you look at our gold picture, we actually predicted 180 or more points off of this low in this period. You can go see that. It came out perfect or better. And this pattern in here is now long. You could see in here 13 weeks right there. This is 11, this was 9. That's a long period, and notice the tweezer top right there. Those are those two tails. So that says gold it's come a long way fast, and it needs to correct. So we've been expecting a correction. Our downward target in here is around 1180, 1185. This is that counter trend comes in at about 1191. So that is the area we expect over the next 6 weeks. Remember, we said 6-week rally in the dollar. We said 6 weeks decline potentially in the euro and in the British pound. Well, normally there's a correlation with that in gold. where gold moves opposite the dollar. Now, gold's been pretty strong all on its own, even in a period where the dollar has been somewhat strong, right? Because the dollar rallied during this period overall, and you see gold actually did also. So gold doesn't have to come down that far, but I think it's going to be in a corrective period. So let's take a look here at the daily chart. And you can see that this chart, there are so many cycles on here that we have that I think are important. Here is the, I'm going to show you the silver. So the black one is the silver cycle that's correcting right here. The red one is the GDX cycle. That's the miners, which are correcting right here. We had a nice little trade that we sweated out in Newmont. That we put in we called off that trade actually today, or that setup. So there's a reason to believe that we're going to have a few more days. We're going to call it 2 to 4 in here of downside, then another attempt at the upside, and then get more into this corrective phase. So we could make 1300 here if we wanted to. I don't have a reason to believe it can't. This is actually a little support zone, and in the next couple days you could take a little long side trade in there maybe. Overall, I would say it's not a trade I'm taking because I believe that we're in a topping area. So we would just look for a little bit more rally in here, and it may be 1280 to 1300 that is actually a short side trade that comes up. That would be what we call a level 1, the smallest trade, because it's counter trend. So this is in the support area, and you'll see when I look at silver and platinum that you've got similar occurrences going on. So just powerhouse moves that we've had in here. /SI. Now this has been just much more volatile, some monstrous days in there. And take a look here at the weekly pattern first. And you could see silver as it bottomed where it was supposed to. The resistance zone here, the bottom of it is at around 16 bucks, a couple pennies higher. And it's still in this rising phase over here. So again, this comes out to about 6 to 8 weeks before the next corrective low. And you can see we always have the enveloping in here in our cyclical as our cyclical projection. So you can see that it projects up into this area here. Now, at some point, when we get a little more sense that it's rolling over, we're going to believe something like this here, and then something like this over here based on that pattern. So, and you can see that would actually form a massive inverted head and shoulders, which would give you much higher projections. I think that's going to occur. And right now we're just in this area of intermediate topping resistance where we would expect to get some pullback from. So when I look at the shorter term chart, you'll see here evening star that formed at the resistance area, some longer tails in here as it starts to pull back. I said in gold 2 to 4 days, remember, of potential pullback. That's the same thing in here, maybe get a little more downside. Here's some short-term support which I didn't extend over there. And then more probably attempts on the upside right over there as we get into this choppy toppy area. That's really what we're going to call it there. The metals got a lot of help last week from a short squeeze, and the biggest day ever in iron ore, 19%, as it popped up from the 40s up to $63 and then really started to pull back pretty significantly. I don't know if there's any futures chart on there. I haven't found it. I just have to go hunt down and read the stuff on it. So silver and gold, they all got a boost in that period and then started to pull back. It helped the miners also. So I would expect that we're going to be in we'll call this a choppy toppy area here in these precious metals. Next one we'll look at is platinum, which is /PL. And that will give you a similar look in here. Platinum had that cycle bottom right there. We actually changed it by a few bars because the low came a little differently than we expected, but then it lined up with the other metals perfectly. We didn't label this, but you could see the bottom in there that formed with an evening star right there. That's the big down bar, the doji star, and then the up bar. And that said right at the cycle area at the timing low that was an important bottom, and that timed with everything else. Moves up to the intermediate 78.6%. That is a very good occurrence. difference. That says that this cycle that's forming in here is a basing cycle right in here, something like this, right? And then after that, much better prices later in the year. So you can see how that forms in there, kind of adding a little bigger picture analysis in there as we use the cycle patterns to help us with that. So platinum, that is the longer term pattern. Here is the short term pattern. And you could see there's that same pattern in there, which calls for, let's say, a couple or 2 to 4 days on the downside and then moving up again. Note for our traders that are trading platinum, there's a smaller cycle in there that looks to be appearing in there. So I have that dotted line in there, and you could see that also lines up right over here for the next rally. So we picked up that little cycle. And so what we do is we put them in there, we look at them, and we see how important they are to the movement in there. So you could see that in there in platinum. Last thing we're going to look at is copper /HG. And this is the pattern we're looking at in copper. You see it's in that green zone. This doesn't have enough of a move in here to declare any kind of a major bottom, though you would guess it is based on how hard it got hit and the way these patterns are shaping up. So we're expecting, some correction in here, some rally, some correction in here. Takes you out to June and then a better period in here. If you look at this big cycle right in here, you can look at this pattern right in here, and it shows you something like this. So you can see how that shapes up, and then up right there. So nice patterns, and it says it's likely a very important bottom there in copper also. So that is the weekly pattern in copper, and we'll take a quick look at the daily pattern in copper. And here you could see in here again this nice evening star that formed in there, and that declares that area of around 230 as a problem. So this 2 to 4 days into the minor support, probably get another rally up after that, and then into this choppy toppy area. So you could see that what we're looking at is the metals looking like they're in a period where they've seen the best of it at the moment. That lines up with what should be a period of stronger dollar here, and all of that, again, I'm calling out what I think are the correlations. I'll call it out when it doesn't work also, or when the correlations start to get off. But right now they seem like they're on, and we're going to look for these patterns to continue. So we're going to look at the financials now, the treasuries and the stock indexes. The bond market, I was so tempted to put in a short side setup for our setups yesterday because it moved up right in the right spot. I wanted to give it another day, and then they just reversed right to the downside. So it feels like a swing and a miss to me as we didn't get that in there. I know a lot of people that get our charts were looking at these patterns and wrote me and said, they see this, they saw the rally yesterday as a place to add shorts, and that actually was correct. So take a look in here at the weekly pattern in here. So you see that 8th week high in there that was right at the 100% fib extension. It's almost amazing as it got right to that area and rejected. So right now we're in the 12th week off of this low. So they've been running 13 to 14 weeks. We're going to call it 1 to 2 more weeks on the downside in here, and then get into the next period. So if these cycle patterns, which have been enormously consistent, look at this black one, the small one right in here. So that's this right in here. You could see these unbelievable consistency, and the next rally due right over here. If we're due for a rally in here that's going to last somewhere between 3 to 8 weeks, let's say, after this low, that says the stock market's got some problems there, doesn't it? I mean, if the way these things line up. So we're looking for another 1 to 2 weeks on the downside in here. So when I correspond that to the shorter term pattern, we'll look right in here, and you will see that the pattern in here is suggestive of this repeating 18-day pattern, having about another week to go. So we missed this little rally as a sell. It didn't quite hang up as long as we expected, and then rolls over. We're looking for the support area in here to be tested. So the bottom of this right over here, or this moving average at 127.15. That's where we think it's going to come down to. And then we get into this next rally phase right over there. So this to us, this next week or so, down in this area would be our cover point on short side trades. When I switch this over to the ZBs, you're going to see a very similar cyclical pattern. Boy, is there anybody else there that does this kind of detail of the cyclical rhythms in the market? I just don't know that there is. So take a look here at you see that was actually a 9th day high there, 9th week high, and now coming down to the support area. It's reasonable to expect the 34-week moving average, which is coming up right to this fib support, in the next 1 to 2 weeks. So that comes to right around the area here of 158.20. It's now trading at 162.27. It could get supported by the 13 and this 50, which is about 161.05. So those are the two supports, 161.05 and around 158.20. We would expect that in the next 1 to 2 weeks. So when we look here at this pattern in here on this, this looks like, again, a little different than the ZNs, is that it seems to have a little longer period of time that it lines up, and here's this support zone in here, right, 158.07 to 160.12. So that's kind of the area we expect it to get in. We're going to look to see how the disparity in these two cycle patterns turn out. They're probably going to end up lining up a little bit closer than the way this looks. But again, they both look like they have 1 to 2 weeks still on the downside in this period. So that is a look at the financials, the treasuries, and when we look for this period of 1 to 2 weeks on the downside, it is suggestive of a better period for the S&P 500. SPX is the first one we're going to look at as we have had just really a very minor correction now. If you look at last week's segment, I went back and showed you a period in 2014 and a period in 2015 where we had this type of a pattern on the daily chart, and it ended up giving you a day down, a day or two down, and then exploded to the upside. We think at very least there is more upside in here, though it might not be an explosion. We're going to look at where those resistance areas are. So here's the intermediate pattern, and you'll notice for the people that follow our cycles closely that we have established a cycle that appears to be just right on with the lows at 18 weeks. That's this low right over here, and now 4 weeks into that rally. Now, we have this drawn in as if the bear market is still alive. We believe that to be the case, and we're going to learn a lot about that in the next few weeks. So we're going to keep that there while the longer term patterns are still very negative, because that's the highest odds situation right now. Notice it gets up into this confluence of Fibonacci resistances. This shows up at around, we'll call the top of it around 2013 on the S&P 500 of that one. Now the next one is way up here at 2053. I don't like that scenario. It could happen. So when we look here at the shorter term patterns, you can see that what we expected to happen was it would come down, test one of these supports. This was a tiny little one right here. Here's a minor support here. This low is the 16th day. This low was the 16th day. This low was the 20th day. So there's a little bit more time in here that it could come down. I have doubts about that. So the pattern that we're looking at in here as this turns up is that we've either made the bottom or we make the bottom in a day or so, and then we turn up and we test these levels again. So you see that fib right there, that top number, that one comes out to that 2013 that we just showed you on the weekly chart. That's very reasonable expectation here, even in the most bearish long-term scenarios. Now, in here, I did not put those resistances up there. I put it up on the weekly chart. So for those of you that are trading off of this, go back to the weekly chart and you'll see that next spot at around 2053. If we move through 2013, I'll put it up in there for you to see. So the expectation is that, remember, the bond market looks like it's got a week or two on the downside. The expectation is that we will try this number here, 2013, and then roll over. Now, if it gets through there, then the pattern is going to look more like this, right? If it stalls here, then the bigger pattern is pushing down, and we'll learn about that from it as it's not able to get through those numbers. But the probabilities are high based on all the correlations that in the next day or so, they're going to start to move on the upside again. ECB could move this stuff tomorrow. But the probabilities are high that somewhere around this 1963 number or this 1980 number where it's finding support right now is the support, and then it starts to move up again. I've gone through a lot of detail today, and I'm hoping that you find value in it. And if you think I'm going too slow, write me and tell me. If you like all of the analysis I'm doing as I go through the detail, well, write and tell me that also. So here we have the NASDAQ. You can see it's gotten up into that resistance area on the weekly also. Same 18-week cycle, key area, the 34-week moving average at around 4,400. This resistance right over here at around 43.68. Very likely to be tested based on the patterns that we see set up in here. Here's the short-term pattern. You can see in here how it sets up also a minor support and 89-day moving average moving to this 44 number also. Everything screams to me 44 on the upside in the NASDAQ in the next week or two. But I got to tell you, the FANG stocks look horrible to me, and I think that after this rally, we're going to get some big decline after that, and that's one of the reasons I believe that we're going to get the failure in here and then come down hard again because of the patterns that I see in the FANG stocks. Go look at my, if you haven't seen it yet, go look at the e-commerce stocks in Tuesday's stock sectors, and you'll see the analysis in there. So this all looking to me like it's going to roll over after the next rally. 1 to 2 weeks we're going to give it. So that is a look at the NASDAQ, the Russell RUT, a very similar setup in here as we've gotten into this rally up into the intermediate resistance zone. We're expecting this to roll over and get some heavy selling in there also. We've had a buying panic in the low price stocks that have been annihilated. Look at this 89-day resistance right there and how it backed off sharply from there. This is a 17-day low right there, minor support. Very likely that we're going to get the rally in here and then turn over again. We'll see how it acts right up around this 89-day moving average and this other high at around 1095 there in the Russell. So important areas in there. Again, a lot of detail, but it's setting up for this, rally to resume, and then I think fail after that, and we're going to see how that all sets up. All right, we're going to look. I've gone a long time today, and so I wish I had enough staff to put in the time indexes for you to be able to see that. Down the road, maybe I'll be able to do that. And then you can just essentially go to the point in the individual things that you're interested in. So at the moment, not able to do that. So anybody gets industrious and wants to do that and send me the time indexes, I can post those. The next thing that we're going to look at in here is the grains. We'll take a quick look at those. Overall, the grain patterns are, we'll call them very mixed. Because the we had that breakdown in wheat, and let's get this corn up here first. Where do I have that on this? There it is. Okay. So I have on one of my other screens over here, I have it linked, so I have to turn my head and look at that. The corn pattern in here has done poorly as far as a window of opportunity for it to rally, and I believe strongly it's the wheat pattern that's leaning on this. The soybean pattern is much better. So you don't have a breakdown in here yet. You could see the channel as it moves up in here, but the odds are high that it's going to roll over and break down. So I would say this is a risky pattern when we look at that. When we look here at the wheat pattern, let's move this to 2-year. You can see that it actually has the breakdown, and this bottom isn't really due until towards the end of April. So that looks to me like it's going to turn lower again. Soybeans got some legs this week, and I'm not exactly sure why. You can see it's moved back up to the top of this area. It's in a yellow zone because of how much this came down and threatened these lows, but still not negative. It's not a red zone. It could actually make a little bit of upside ground, and a lot of buying did come in. Let's just take a quick look here at this daily chart, and we've seen this big inverted head and shoulders tempting, trying to get formed, and I'm wondering if it's not going to fool us, and this one is actually going to break in and get a breakout. So we're going to look at the most extreme upside level of about 894, at about 10 cents higher than it is now, as an upside resumption. We'll keep our eye on that because the beans clearly have the best pattern in the group based on what we're looking at. And if there were a pairs trade in there that I'm looking at in here, it would be long beans and short wheat. That would be, to me, the setup. I don't trade that stuff much anymore, though I traded in the corn pit on the board of trade for a while. So I have a lot of familiarity with it. Last thing we're going to look at in here, and then I will end this long segment, is the coffee. And coffee's also put on a little better pattern than it had before. We had believed that it was going to, try to roll over again for one more dip on the downside. We don't have any reason to believe that won't happen yet, because you can see we're still in this downward trend. And these lows come into April, early April, late April, right over there. So it could very easily just roll over again, test that area, and then be better. So it's getting a lift in here from what is a more favorable commodity a situation just across the board. And here you could see on the daily chart that the pattern is suggestive of, again, at this 89-day moving average. How's that for cycles screaming at you? Of it rolling over again for one more shot down over here to 113, 114. I'm going to say that's the highest odds that it fails at the 89-day again and then rolls over. But if it gets over that last high at 126 right there, that will be a message that this longer term pattern is turning up. So we're going to keep our eye on that one closely. So that is a look at it. A lot of detail today, a lot of discussion of correlation, and a lot of potential setups in here, and some important stuff coming up with the ECB. Send me your comments, testimonials, criticisms, and always love hearing from you. That's it, and I'll see you in the next segment.